Welcome to the pod focusing on the aftermath and recovery from the devastating Palisades fires of January 2025. Journalist Joel Pollak, entrepreneur Oren Ezra, and technology expert Ron Goldschmidt serve up to the moment vital news and information, discuss the ongoing recovery efforts, and introduce us to the individuals and trades who are playing key roles in rebuilding our cherished communities. We're diving into the deep end and learning quickly how we can move forward together. We know the pain because we're living real-time news, stories, resources, and insights on the ongoing recovery effort. Buckle up. We're three homeless guys.
Welcome to Three Homeless Guys, the podcast about the Palisades fire and the rebuilding effort. I'm journalist Joel Pollak here with technology expert Ron Goldschmidt and entrepreneur Oren Ezra. And we have a very special guest on this episode. Her name is Linda Forman. She is an accountant, but more importantly, she's a very close friend of my family. And she's been my accountant for as long as I can remember. She has worked in many different states and is very close to people on both sides of the political aisle. She understands legislation and the ins and outs of taxation on every level. And we haven't really done an episode about taxes, and that's starting to become a huge issue. So first of all, Linda, welcome to the show. We'll give you a more extensive introduction after we do a round of news, but it's nice to see you.
Thank you for having me.
All right, well, I'll start off with a little bit of news. I am in the Chicago suburbs, making my way across the country, and we're keeping tabs on what's going on in the Palisades. Lots of community meetings going on, lots of meetings with the city council, but I think there are two news pieces that stand out. One is that the Army Corps of Engineers, and this is a good thing for our own Dr. Degree, Oren over there, the Army Corps says that they are moving ahead of schedule. They anticipate being done with most of their lots by the end of August, which is, I think, almost a year faster than they originally said. Remember, everyone was talking about 18 months. That would be something like 8 months. So if they can pull it off, it would be pretty amazing. It doesn't mean all the debris is clear. There are still some trouble spots, and there are some private contractors that'll take longer and so forth. And the Army Corps, I think, did have a bit of a bias from the system, or a helping hand. People in government definitely helping them rather than encouraging private contractors. It's an issue we've discussed, but they do seem to be moving pretty quickly. I'd love to hear your thoughts about that, guys, but the bad news, or the frustrating news, has to do with rebuilding permits. So if you remember, a few weeks ago, Mayor Karen Bass came out and said that she was issuing an executive order to waive all permitting fees. And some of us said, well, wait a minute, she doesn't have the authority to do that. It has to go through city council. I think we talked about it on this podcast, that she was going to have to get the city council to approve it, and there might be some resistance to that, because who wants to help the rich people in the Palisades when the city has a $1 billion deficit and is cutting services elsewhere? So the city council hasn't approved it yet, so we're still stuck with this rebuilding fees, permitting fees, all kinds of fees, and it's going to stop a lot of people from rebuilding. So that's the news, the good and the bad. Ron, I know you've also been traveling and moving around, but I'd love to get your take, and then Oren.
We are. I'm in Europe, in Paris currently. There was an event here, a music festival, like a couple of days ago, where there's like mass, people, like a mass event where 300 people got like stabbed with syringes, I'm hearing, and like all kinds of crazy stuff. You hear about Paris and the threat of terrorism and Iranian proxies anywhere. And yet you get here and on the ground, everything is fine. People are shopping. People are out in cafes. Life goes on. It gives you a little bit of perspective. Like everything is, everything moves on. Like even though we might be dealing with our own, large event, with the fires, as soon as you get out of this kind of like range of kind of like tragedy and everything that's happened, you kind of like have to just see it outside of perspective, is that everything goes on. So that's kind of like my view on things from here for now.
Yeah, I saw the footage of that. People running. There was a whole crowd. There was some smoke in the street, and I couldn't believe people were being stabbed with syringes. It
Yeah.
looked pretty crazy. But
Yeah.
I guess it's what people say about L.A. We had the riots, but it wasn't everywhere, and life went on. Although I was very upset about the riots. We've talked about it before. We don't need to revisit that. But um, anyway, Oren, what's your perspective? I especially want to hear what you think about the Army Corps moving quickly, or so they say. I think you muted your microphone. And actually, Linda, if we could get you to mute while you're not talking, just because I think we got some background noise from the office there. It's hard to do. It's very good. Yeah, we got it. All right, go ahead, Oren.
Yeah, so I think it's great. I'm very happy about it. I think that my whole thing was supporting our contractor, our community contractor. That I don't think we did enough, and I hear a lot of stories still until now of people that Army Corps of Engineer finish with their homes, and then private contractor need to come in and finish the job, clearing all the concrete and breaking all the concrete and doing a lot of extra work. But still, I think it's great. I think that the pace that they're moving, I was driving on the PCH the other day, it looks much, much, much better. So I think it's great. Hopefully we can now rebuild, and the rebuild process is going to be we have to deal with so many other issues, like with first of all with insurance companies. Then we need to deal with the city. Then we need to deal with the contractors, and the contractors need to deal with the fact that they don't have enough employees, and we need to deal with the fact that the lumber cost is going to get higher. So I see a lot of issues. So I think that I'm just sitting on the fence right now, waiting to see, what will happen with the city, what will happen with the costing. I know that there is a lot of people that are running really, really quickly. I'm very happy actually to see in Sunset Mesa that people have started building their houses. So it's good news, I think. And let's see what will happen. And I think that maybe not on this episode, but we really need to talk about the experience of people from insurance companies, because in the beginning, me and Ron were sure, hey, you know what, we are one of the lucky ones. We have State Farm. And I think from what I'm hearing is that a lot of the people that had California Fair Plan, although the coverage is not you cannot get, I think, coverage more than 3 million, but at least they almost all of them got a lot of their money, if not all of their money. And with State Farm, it's going to be a long, long, long road. So I think, especially for people that are rebuilding and deciding which company they want to go with, will be very interesting to do an episode about it.
Yeah, very interesting. And we should also just say, in terms of world events, we talked about the war between Israel and Iran in the last episode. As we are speaking here today, there's a ceasefire, which I think happened more quickly than most people anticipated. So that's also good news. We can do a follow-up with Nate Miller sometime down the road, perhaps. But let's move to our topic at hand, and I want to introduce Linda. She is an accountant based in Evanston, Illinois. She's also the past U.S. Small Business Administration Accounting Advocate Award winner and a past vice president and board member of the Illinois CPA Society, Certified Public Accountant. And she's also on the board of the National Association of Women Business Owners in Chicago. And really, Linda, as long as I've known you, you've been involved in everything. You know everything that's going on at the state level in Illinois, and you have been able to help people with tax questions, not just in Illinois, but as far across the country as D.C. and California and other places. You just have this expertise, and if you don't know the answer, you know how to find the answer. You work with small business owners, you work with families. You're amazing and always busy, especially in the springtime when it's tax filing season. But we wanted to bring an accountant on the program, and you're the best. We wanted to bring an accountant on because people are starting to face these tax issues. And it's started coming up in a number of ways, and we'll talk about all three of these major ways. But I wrote down the three major subject areas. One of them has to do with the property taxes that people are paying and the assessments of their property value. There's been a whole controversy about that, where some people have asked for a revaluation by the county, and it has perhaps resulted in their property being valued slightly less, but not substantially less, even if they've lost their homes. Then the second set of issues has to do with rebuilding and tax issues around rebuilding. That's been a big fight in Sacramento. The state failed to push through some legislation that would have protected homeowners from some higher taxes when they rebuild their homes. And then finally, the issue of selling and sales. People face capital gains taxes, perhaps, if they sell. There are all kinds of other problems. So I thought we should have you on to break some of these things down, because everybody, no matter what situation you're in, whether you still have a home in the Palisades, whether you've lost your home, or whether you're just going to be selling and you're trying to get the best deal, you have to think about the tax implications of all these things. And I haven't really seen any public meetings about this, so we thought we'd bring you on. So Linda, welcome to the Three Homeless Guys podcast.
Well, thank you very much. And you certainly have a lot of issues to deal with. And one of the things is most of the local, the real estate taxes that you pay, it's for the school system and it's for the municipality and maybe county, not necessarily for the state of California. So my first question to you when we talked before was, does it almost doesn't matter if somebody has a budget, let's say under normal circumstances, a school system has a budget of $20 million. And whether your house is assessed proportionately at one level or at a higher level, the only budget that they're trying to cover is $20 million. So your assessments might go up in a normal circumstance, but the actual tax levied would go down. So my question is, if you got a school system, some of it's destroyed, what are the, what have they been reimbursed by the insurance companies? They don't necessarily have a lot of kids to cover because nobody's got homes. What's the budget? So that's a big loosey-goosey open deal. So part of the real estate taxes, what are they assessing on? And so that's one question you really need to bring back to the community is, whether the assessments are right or wrong, what's the budget? And I think that's one big open hole that you need to go through. In many states that I deal with, there's a group of lawyers and other professionals that people go to when their assessments are quite high, and then they go to the county assessor and they have a little talk and some coffee, and the assessment might go down. So my question back to you is there anything like that happening? Do you see any kind of, are some of the people going to their law firms privately? Is there any community effort to get people to get to a group of attorneys on their own?
I haven't heard about that on the tax issue, and my assessment went down slightly. I have messages from other people who saw a very slight decrease, and they're very upset about it because they feel their homes were badly damaged or destroyed. And you asked a really good question. What are we paying for? There's actually an article this week in the LA Times about the LA Unified School District, which is the public school district, and how they still haven't adjusted to post-pandemic spending. They got all these infusions of cash during the pandemic, and they spent the money, and nobody knows what they spent it on. And now that money's not available anymore, and they haven't made the cuts appropriately. So it's possible, Linda, that we're victims of a school district that is still struggling with budget issues, and maybe that's the reason that our assessments haven't gone down, rather than an honest look at what the damage to our properties is. I don't know. I mean, Ron and Oren, are you guys hearing anything about people signing up with attorneys over the tax issue?
I haven't heard about anything about folks signing up with attorneys yet. My assessment went down slightly again. I think it's a year-by-year basis.
Wait a minute. Wait. Just hold on. So your house, just to be clear, your house burned down and your assessment went down slightly.
Yeah, my assessment went down slightly because apparently they came back and they said, "Oh, we forgot to reassess your house after your remodel, so we have to catch up on all of that." And I haven't even heard about it.
They're adding in the value of the remodel, and the remodel also doesn't exist. So you're suffering
Correct.
for a remodel you paid
Correct.
for,
Correct.
and it
Correct. And
doesn't
you know
exist.
what? It's on my laundry list of like problem number like 198 that I didn't even like look at it. I'm like, whatever. They also deferred payments for a year, so I guess I'll have time to fight it. But I don't know what the budget is. I don't know that they do. I know that some folks are having more questions around the fact of like what happens and when do things get reassessed once you rebuild? Do you get reassessed right away on a new house, even if you don't move in there? Let's say you're one of the first batch of houses that are going in, and that's a good question for Linda. I don't know if it's a question for Linda because it's probably more local, but once your new house is built, and let's say you don't even like move in there yet because the whole street is burned down, do you get reassessed at the new levels? I'm not sure what's going to happen. I'm not sure. I don't have high confidence in the process at the moment, but it's not something I've been paying a lot of attention to.
Pretty funny that one would think you'd be reassessed on vacant land, but that's beside the point. One of the things that actually my area did several decades ago was really smart. They were worrying about just the general state of affairs of real estate and people maybe running away to other states. And so what they did was they said, okay, if you improve your house, the first, and I think the figure, and there was an assessed figure, so you probably had to multiply it by, let's say, 6 or 8. The first $40,000 of your assessed value is never going to be taxed. So I think that might be something you might want to push for, because when you rebuild, you've got all the fire ordinances and all the other things that they're going to put into the permits. So it's going to cost more money. Costs more money, more value. So if there could be some sort of a fair fixed amount where you're never going to be taxed on it, that might bode well for the area.
Yeah, I think that's the push that was happening in Sacramento that fell short, at least for now. And Jeffrey Prang, the county assessor, actually put out a statement saying how disappointed he was that the state hadn't come through in allowing the county to do that. I don't know if it's exactly what you're describing, where there's a set aside exemption for improvements, but basically I think the problem is that when people are rebuilding, they're going to improve their homes, sometimes because they have to improve their homes just to stay within the new fire code, and they're going to be taxed on the improved value of their homes. And he said, it's just not fair. We're requiring people to do it. Why would we tax them for it? They didn't lose their homes through any fault of their own. So I think that fight is happening. I do think it'll get resolved eventually, just because there are too many people being too vocal about it for it to just slip away. But everybody's looking for cash. California is short of cash. LA is short of cash. The schools are short of cash. And, the homeowners are short of cash for a different reason, not because there's anything that homeowners did wrong, but we're trying to get insurance money and we're trying to get a break on taxes. And unfortunately, I think there are too many people with an incentive to continue taxing at high levels, even if you don't have a home to live in. I guess we've started talking about the rebuilding subject. So what are some of the other taxes people might have to think about as they plan to rebuild their homes if they lost their homes?
Well, one of the things I'm certain a lot of people, and let's say that there is a mechanism for figuring out what the value of your land is, your vacant land, if you have lost your home completely. So you can claim a casualty loss. You can claim it on your 2024 return or 2025 return. Those who may have filed, the people who, and it was almost impossible to file before the fire, but if anybody's been able to file after the fire, if you can go back and you can claim a loss on your 2024 return, or you can do it on a 2025 return. You can amend the 2024 return if you've already filed it. And so let's say your home was worth $3 million and you got $2 million back in insurance, and there's a value. You can have some real estate appraiser say, yes, it was a $3 million house. Yes, you have a piece of land now. You got insurance proceeds or you didn't. And so whatever the net was of what you paid for the house minus the loss that was not covered by insurance, that's going to be your basis in the property if you rebuild. Or if you don't rebuild, you still have a loss. So so you could claim a casualty loss. Let's say you don't and you rebuild, because it's going to be really tricky trying to figure out what you lost, especially if some people have homes standing but they don't have a neighborhood. How do you evaluate that? So let's say that you don't claim a casualty loss and you rebuild, whatever your original cost was minus whatever insurance proceeds you might have gotten, plus all the improvements that you've made all over the years, that's going to add on to the cost of your new home, the rebuilding. So don't forget the old costs.
It starts to get complicated, but
It is complicated.
can you claim that casualty loss and still rebuild your house? You're not forced to choose one or the other.
No. Let's say somebody just has, regular circumstances, part of their house burns down, they rebuild it, they can still claim a casualty loss. It just, whatever the net is between the insurance proceeds and what you paid for it, that's going to be part of the basis of your new rebuilding. So
And
yes,
when you say
can
what
claim
you
loss.
paid for it, I mean, what if you bought your house in 1950 for $50,000 and now it's worth $3 million? And do they measure the expert that you would bring in? I mean, do they measure the value of the home according to the opinion of the expert, or is it against what you paid for it in 1950? Because
They value it basically at what the home was worth before and what the home was worth after. So it could have been
I see.
worth $3 million before and $1 million after. But don't forget, you bought a $50,000 house. I bought a $26,000 house long time ago. It grew a lot. And so, it basically more than doubled in size, and you redo the kitchen, you redo the bathroom, you put on the new roof, you want a new pool, you want all of these, and you add this up, and you'd be surprised at how much over the years you've actually put into that house. So it's not just I paid $50,000 for it, 40 years ago. I might have done that, but I put in a lot of improvements, and of course everybody's got records that are burned. You don't take your household file when you're running for your lives. You can use your best guess, and if you can remember, I did this, and that adds to the cost of the house.
And that's on your federal taxes, so you can use an expert to help you estimate these values, even if you don't have the records. And that's okay.
Well, you can use the person if they can describe this, and I don't know how. I don't even know how intact your assessment records are at the county level. I hope they're intact at some point, and how accurate they are. That's a whole other matter. But you can describe the home to the experts. If there's been any recent comps in the area before the fire, and you have a similar house, that's helpful. And certainly you can establish what it's worth right now. That's the easy part. And getting money from the insurance company is not such an easy part.
So is the exercise mostly to offset any gains you will have once you sell the house, or like that exercise of, like, let's say you say you lost $2 million on the fire, and then you go ahead and you rebuild that home and you resell it for $5 million. Is the whole exercise meant to basically like bring up the basis of the house against that sale in the future? Is that like the main benefit?
Yeah, I mean, whatever you can deduct as the casualty loss, that can't be part of the basis of the house. But whatever you have, if you're left with $1 million worth of basis after the insurance company is paid and after the casualty loss adjustment, then you go forward. And I know that Joel had shared with me the article in the Los Angeles Times. The burned lots in LA will sit empty. and they.
Yeah, I don't know if people are familiar with it, but
Oh.
there was an article that came out in May saying that we need to see changes in the federal tax code because right now people are incentivized to hold on to their lots as long as possible. It was good when there were homes on those lots, and especially elderly families who had bought in the 50s or 60s and had sat on their homes and watched them increase in value. They wanted to pass these homes onto their kids without having to deal with the tax problems that might otherwise have come with selling them and so forth. But now that they're just sitting on empty lots, they have the same incentive to hold on to these lots, but not to rebuild anything.
Correct. And
So what do we do
two
about
of
that?
the two things that were covered in the article was, permanently, let's not have any tax effect on if you sold that house or if you sold that piece of land. And that gets to be, if I'm looking at it as a practical matter, I doubt that has much chance of passing. Just my suspicion. If it is taxed, it's taxed at a capital gains level, and the article didn't mention the California taxes, and California taxes sometimes are not that dissimilar from the federal taxes. So you're missing, let's say, half the burden by not also questioning, okay, what about the California taxes on the gain? Because California, unless there's some magical thing happening, and California allows a permanent non-recognition of the gain, that'll be interesting. The other thing was go back to the old law, go back to the I think it was 1997 law, where the situation was, if you had a house and you bought another house, and the house that you bought was more money than the house that you sold, you can defer the gain into the new house. The big problem with that is people forgot about that election, and so I would imagine that probably 3/4, if not more, of the people who have sold homes recently have totally forgotten about that decrease in the basis for the gain. They put it into the new house. So if you had $1 million gain and you bought a house for $4 million, it's only going to be $3 million of basis. So when you go to sell it, it's not $4 million basis, it's $3 million. And I can't tell you how many people have been forgetting about that. So I don't know if the federal government wants to lose that revenue. However, I have not explored in detail, and this information is not easy to get. Has anybody looked into what other areas that have had disasters, what's been done on I don't think much has been done on a federal level, but on a local level?
I don't know. People have looked at other fires like the Woolsey fire, which was up the road in Malibu a few years ago, and they've looked at the Paradise fire up in Northern California. But we haven't actually heard about this very much at all. I haven't heard about it, guys. I mean, this is why I wanted to have Linda on, because, once you start making decisions about your property, that's when these tax implications come in. And I just haven't heard anyone talk about them. We've been all so focused on the practical challenges of everyday life, and then the issue of removing debris and dealing with the city on permitting, and even just getting access to the Palisades. And now that we have access, making sure that people can drive through without being pulled over for going 5 miles over the limit. It's been so overwhelming that we haven't really thought through. And I think also part of the reason for that is that we had this deferral of the deadline for filing taxes because of the natural disaster. So people haven't really been pulling all their tax documents together the way you normally would. And that's why we are where we are. But just to take this to the third bucket, if you will, of tax questions, and we can come back to the issue of assessments and rebuilding later, but you've alluded to the idea of selling the house. So if you are one of those Palisades property owners who's in the position of wanting to sell or needing to sell, you might face capital gains taxes because anything, if you're a married couple filing jointly, this is what I understand, anything over a $500,000 gain is taxable. And that's an issue for a lot of people, again, because many people bought homes at a time when homes were much cheaper and will be selling their lots or their homes at a time when things are much more expensive, even after the fire. You can sell a lot in the Palisades for $2 million for most of the lots, really, around that ballpark figure right now. At least that's what I've seen in terms of the sales figures. It might change over time, moving higher or lower, but you're going to be significantly higher in terms of that sales price than the sales price was when you bought your house originally, if you bought it at least 30 years ago. So are you looking at big capital gains taxes if you sell a $2 million lot that you bought for $100,000? I mean, that's $1.9 million. You're well over the $500,000 cap. So now you've got $1.4 million that's taxable theoretically. So maybe you don't sell, or maybe you sell at a lower price to avoid the tax. I mean, what happens?
Yeah, and it's a personal residence. If it was a rental property, it would be a whole other ballgame for those of you who might have, rental properties, because you can do what they call a 1031 exchange, possibly, and defer some gain. But if you're talking about a personal residence, you better sit there and figure out every single nail and screw and window and everything else that you put into that property. Landscaping, put in trees, put in bushes, any of the fix-up expenses, and you're probably going to have one bucket of fix-up expenses to even get it, even if it's now vacant land, to get all the debris off of it. And there also, when you buy the house and when you sell the house, there's closing costs. There's commissions to the realtor. There's all sorts of, I'm sure, county and local fees to close it. Attorney fees, but I don't think that you're obligated to have an attorney in California to complete the purchase. But all those things come in, and so yes, you have to pay federal tax. Depends on your income level too, because I don't know who's earning income. That's a whole other problem. And so your taxes could go anywhere from 0 to 20% for capital gains federally. But they're not going to also be pretty for California. So you've got two buckets to look at for taxes, and it could be really costly for you.
Are you saying that you could reduce the taxable amount by adding in things that you spent on the house as part of your basis, because you're only taxed on the difference between the sales price and the basis? So you want that basis to be as high as possible.
Right, and also the closing costs and the fix-up expenses to even be able to sell it, so that you have. I mean, my house, believe me, in the last several decades, I think that 26,000 grew a lot, an awful lot by many. So that's, you really have to sit there and think of all that you have done. Not in just a maintenance thing, but in terms of, I can't imagine anybody having a 50s kitchen now in their home.
Another item on the tactical list, like as far as basis goes, and it's a question I've been asked a few times, and I'd like to get your opinion on it. So, a lot of people have the contents insured, obviously, and some insurance companies are like paying out the max right away. So let's use an example of like 500,000. Your contents were covered for 500,000. You're with an insurer. Let's say they decide to pay you out the full 500,000. The logic is, and what I've been told and what I've been advising other people is to itemize the losses anyways. If you're dealing with a company like State Farm, which I am, they ask you to itemize, which is like, a full-time job essentially, and like basically itemize every single item you own. So, and then you kind of have to do that exercise anyways. And let's say if your losses are well beyond where your coverage is, I was basically advised to like itemize them anyways and show all the losses that you have, So you can put it on record. So if your loss is like, let's say $1 million, you're only covered for 500,000. You still want to itemize the $1 million because then you can show that $500,000 is a loss on your taxes. Is that correct, Linda?
In terms of the fire loss, yes, you could do that. Obviously, your personal effects aren't going to add to the basis of your home, but
Right.
you've certainly lost them. So they're kind of into two buckets. One is the real property, and the other is your personal items that really need to be reimbursed.
So the personal items, what bucket does that go against in
That
terms of?
that goes against whatever the insurance company is. So you're saying $500,000, and let's say your personal items are more than that. That all the furniture, everything else was destroyed. So you would basically have that as a casualty loss, and
Right.
that's how you deduct that. In terms of what you get for the house and the rebuilding of the house, if that's where you want to put the proceeds, that goes into basically the real estate bucket.
I have a question about the insurance proceeds in a second, but I should mention one tax issue we have discussed, I'm now remembering, was Measure ULA, which is this parcel tax they have on sales of properties worth more than $5 million. I think they've raised it slightly now, but it's not going to affect most people. It is going to affect some people. Measure ULA, it's supposed to raise money for housing for the homeless and homeless programs, and it's a big controversy. The mayor said she wants it to be waived. But again, like the executive order on permitting fees, the mayor can say something, but actually to get it done is a lot more difficult because of all the procedural hoops. And in that case, it was a referendum that passed the tax, so you might have to go back to the voters to get it repealed. But what I wanted to ask you about insurance proceeds, excuse my ignorance, but we're not being taxed on those, are we? If you get your...
Absolutely not.
Not,
No,
okay, just to be sure. I just got alarm bells going off.
Yeah, as long as the loss is going towards the house. If you lost $1 million and somehow somebody bamboozled the insurance company to give you $2 million, that might be another story. But that's never going to happen. So no, any of the insurance proceeds, any of the grants that you get that people have asked for, so they could live, that's not taxable. So anything like that. The unemployment, I can't imagine not being taxable. They're very generous that way. But anything else, there are moving costs. While the federal
Wait, just a
government
second. So wait, the unemployment compensation people might have is taxable or is not?
I would imagine. Yeah, I have not seen anything that says that it isn't.
Oh, I see. Okay.
So there's been no waiver on that. But any grants that you get up to the amount of what you spend it on, any excess would be taxable. But that's kind of hard to trace as well. So you can kind of blanketly say that most of those grants are not going to be taxed to you.
I didn't mean to interrupt. You were saying something about federal versus state.
Yeah, the state is if you move for
Right, moving
the benefit of a
expenses.
job and you're not in the military, the federal government does not allow moving expenses. California does allow moving expenses, job related. The issue is, who's got a job available 50 plus miles away. So I don't know whether that's even an issue.
Well, suppose you say to the IRS, or I guess to the franchise
To
tax board,
California.
that's what we call it in California or something.
Mm-hmm.
Suppose you say, look, I lost my house, or even if my house is still there, I had an office in my house. I did most of my work there. We did other things with the office too. I painted pictures with my kids or whatever, but I had an office space. That's where I worked. I didn't change jobs, but I don't have that workspace anymore. Can I claim moving expenses if I'm renting a new house 5 miles away where I will have a workspace? I mean, how far can you take that?
Generally, it's iffy. It's iffy.
Okay.
especially since you said your kid's color. There, it has to be
Right, that's what I was getting at.
exclusive.
Because I know on your normal tax return, you can't claim an office in your house unless the only thing you do in there is your office.
That's correct. And then the crazy thing about that is, okay, you have a home office, and let's say that you fall within the purview of having to be able to fully deduct your capital gain on your house because you only have a $500,000 gain. That doesn't apply to the home office part of your house. So you're essentially selling two properties. You're selling, let's say, 3/4 of a house that's personal and 25% of a house that's business. So they're taxed differently. And even though you could gobble up that whole $500,000 exclusion, if you've claimed that part of the house as business, you can't put that gain exclusion against that. So if you're moving, that's
Wow.
another tricky matter.
Oren, what are you thinking about all this? Because you're so deep into the construction process and everything. I mean, are people asking these kinds of questions when they talk about rebuilding, or are we just not there yet? I mean, this all started hitting me in the last few weeks. I don't know what you're feeling because you've been so hands-on with your own rebuild.
Yeah, so while you guys are talking, I'm actually thinking a few steps ahead of this, and I'm like, okay, there is so many things we need to deal with, and I'm in terms of like tax and stuff like this, I'm not getting too deep into these things. I'm very fortunate I have somebody like Ron that knows all the little shticks about it, so he's helping me and advising me. But I'm thinking, basically I have like people that can help me with like every part of the process. But what about the people that don't have these people that can help them over the process? So I'm just starting to think of, okay, all the information that we gathered here throughout our podcast, throughout our, like, I don't know, probably almost now 30 episodes, how can we help people getting the information and making it very easy for them? So somebody can come in, talk to a bot and like say, hey, this is my situation, can I get an advice based on what Linda said, based on what was talking on the 3 homeless guys. So I'm trying to solve how we're going to take all this information right now that we're getting from all these people, amazing people like Linda and like other people that have been on the podcast, and make it easy for people to take decisions. So that's where my head is today.
Well, maybe the answer, Linda, is to hire Linda. Or Linda, what do you think? I mean, you're very busy,
100%.
but
Yeah, I think that I would imagine that communities, and it's probably very hard. I don't know whether they're, because everybody has kind of scattered. It used to be that, let's say, a Chamber of Commerce or some of the local law firms or CPA firms would have some pro bono help for people. This is massive, and there's no people around. I hear that FEMA's doing just a bang-up job with helping out. Sarcasm
yeah.
exuding here, but it's a real problem, and nobody that I have seen is putting together, let's say, a group of experts in California that you can go to, that there could be a simple matter of a YouTube presentation, whatever, because there's no help. That's the bottom line. I haven't been able to see
We've
any.
had some effort. I mean, there are some great WhatsApp groups out there, and all over the Palisades, people are presenting. And the law firms have been good at trying to get clients to sue, and they're building these cases, these mass torts against the LA Department of Water and Power and so forth. But I think you're right in that we're not seeing professional associations necessarily do that. Now, I've started a couple of nonprofits in our neighborhood, and someone from our neighborhood was very helpful in finding a firm that was interested in doing pro bono legal work for the nonprofit. So we have had people step forward. as you said, and offer professional services on a pro bono basis. But maybe if there's something that comes out of this podcast, I mean, if listeners want to share their accounting firms, there are probably some accountants in the audience, if they want to share their services, but also if there's some effort to provide this kind of pro bono help, because it's difficult. I barely understand it. I only understand some of it because of our conversations, Linda, but I think people need to be very careful because you don't know what mistakes you're making as you go. It is so easy to make, like you said with the office situation. I mean, who knew you'd be selling 75% of a house one way and 25% the other way? I mean, it never would occur. All I would be thinking about is, hey, I get this $500 tax deduction or whatever it is for calling my office an office. Yeah, I mean, what are the steps people are making now or decisions people are taking that could affect their tax liability? And I know it's coming up because people are getting offers sometimes on their lots, and you know that's fine. I mean, people have to do what they have to do, and some people may have to sell. But then, are you selling for a fair price if you're going to be slapped with a massive capital gains tax at the end of it? Maybe you don't sell then because you're going to be losing a huge amount of money, and maybe you don't think about that until you're in escrow and it's almost too late. Oh my gosh, I should have talked to my accountant first.
Right, or in certain cases, especially like this, the IRS is actually somewhat lenient in terms of dropping penalties and only charging interest and letting you pay out over a certain period of time. Or if you're totally broke, they will assess what they can collect from you. And so those are workarounds. Unfortunately, California is infamous for not being a state where you can work. I mean, people all over the country like, oh, California, we have to deal with them, and they just shut you out. And it's unfortunate that you've got, you're beating your head against the wall with the state. But I would think, you've got the California CPA Society, you've got, I'm sure, the California, like the Bar Association, and if it could be presented to them, to big groups that aren't necessarily, directly affected by the fire, and they hire interns. All of them hire interns. They need to give interns jobs to do. Have them start working on maybe helping the community out, because they have to do a certain amount of pro bono work anyway. That's kind of written into the I don't know if they call it the charter or whatever. It's the way the business
ethics or whatever
Right. So I would go to make a big, get the bigger firms to get some sort of coursework or YouTube or whatever going so that everybody can share it. And have
even just a list of questions. Linda, I know that at the beginning of every tax season, you send all your clients a questionnaire. Before you ask them for their forms and to fill things out, you ask them, has this happened to you in the last year? Do you intend on doing this? Have you had any new kids? Have you had any of this and that? And, maybe a good questionnaire to go through the community and say, all right, whether you're rebuilding or selling or repairing, are you doing this? Are you doing that? Have you thought about this? I mean, I think just having a list of questions, even if it's a few pages long, is so helpful. It would be great. I'm not giving you an assignment, Linda, but maybe someone out there can do it based in California, knowing our quirky California rules and everything. It would be helpful.
And just do even something simple like a flow chart, because people see words and they get panicked. If it's more than 2 paragraphs, they can't think anymore. But if you have a flow chart, did this happen to you? Yes. Okay, go in this direction. No, go in this direction. And then just wend your way down. And I think things like that are really helpful because they can't understand anything. When the Affordable Care Act came out and people wanted to sign up for the marketplace, I'm sitting there trying to help somebody once. I'm going, what idiot wrote this? I can't even understand what they want. And I'm sure they've made it simpler since, but just something simple that they can put themselves in. Yeah, I belong here, and I'm going to flow on this path. I think that would be tremendously helpful.
Oren, maybe your bots that you want to design for people to get advice could work not just on accounting, but on everything. Like make a flow chart for people. Are you rebuilding? Are you in the county or the city? Just give people different decision points.
Yeah.
Yeah,
The
yeah,
other
100%.
thing
And
is,
then
I'm
advise them who they can use from the community or like things like this, or walk them through like just through the process of dealing with insurance. Walk them through the process of dealing with their taxes. Walk them through the process of dealing with rebuild. All of these things, I think, are things that today with bots can be made way easier than what would have happened like I don't know, like 2 years ago, a year ago even.
Yeah, and most of these societies, CPA societies, legal societies, they normally have a list of people who accept business. I know with CPAs, even like my practice is closed to new people, and unfortunately many others in the area it's the same way because we don't have any staff people, and it's a problem. But if there's a lot of people in California whose businesses, their clients have been burned out, so they might have a little bit, let's say, unfortunately, more free time than usual. And certainly the interns can help with basic items. And so I really think, obviously the government isn't helping you at all. And
Right.
You need to find a source and make it, because I don't know how widespread the communications are with all of
Right.
the various areas. But if you could have some way to get them together and say, hey, can we get the bigger societies, the bigger law firms, the bigger whoever, to get something that's understandable, where if you're in box A, you go here, box B, you go here. I think that would be incredibly helpful. And the other thing is, it sounds like there's a huge accountability problem. And how do you
Yeah.
assess taxes when you're not providing services? I mean, to fill a hole
Yeah.
from the post-COVID budgets.
Yeah. We talked about that a little bit a couple of weeks ago, but that's going to be a recurring theme as well.
Oh,
Linda,
yeah.
you've been very generous with your time. We have to leave it there today, but we want to thank you, Linda Forman, CPA, and you can find her on the web at cpaevanston.com/Linda-Forman. And you can find us at 3homelessguys.com. And our email address is pod@3homelessguys.com. If you're watching us on YouTube, please like and subscribe. Same thing if you're listening to us on the podcast. For Oren, Ron, and myself, Joel Pollak, thank you for listening to 3 Homeless Guys. Until next time, stay strong.
Thanks for listening to 3 Homeless Guys. If this episode hit home, please subscribe to our channel. Check out 3homelessguys.com for RSS feeds to your favorite streaming service. Follow us on social and share this with a friend who needs to hear it. Drop us a review or shoot us a message at pod@3homelessguys.com. We'd love to hear from you. Stay strong, and we'll catch you next time.